Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday, the 15th of December 2018, and we're providing our gold and silver weekly update for the week ending the 14th of December. Gold fell $10 last week from $1,248 to $1,238, having hit a high of $1,250 and a low of $1,233. In sterling terms, gold finished the week at £983. That's up £3. And in euros, it closed at €1,095. That's down €1 on the week. Silver fell 5 cents from $14.62 to $14.57, having hit a high of $14.80 and a low of $14.48. In sterling terms, it closed at £11.58. That's up 9 pence. And in euros, it closed at €12.89. That's up €0.05. The gold to silver ratio fell from 85.3 to 1 to 85.0 to 1. The Dow Jones closed on Friday at 24,100, down 496 points on the day and down 288 points on the week. And the Nasdaq closed at 6,910, down 159 points on the day and down 59 points on the week. And the S&P 500 closed at 2,599, down 50 points on the day and down 34 points on the week. Brent crude fell $1.39 from $61.67 to $60.28, and US light crude fell $1.41 from $52.61 to $51.20. The dollar index stands at 97.44. That's up 0.93 on the week. Well, we ended last week's summary with the following words. So we can see gold and silver continuing to rise a little short term, but are of the opinion that we are still operating within this relatively tight band of $1 for silver and $100 for gold, all of which to some degree will be sorted on the 19th of December, when we shall see what the Fed decides to do about interest rates. Unquote. And frankly, in US dollar terms, they both fell a small amount, and in sterling terms, it rose, and in euros, it was mixed between gold and silver. So how did the week actually play out? Well, gold rose a little at the start of the week, fell back again with attempted rallies within a tight $70 spread, having said that, and ended down just $10. Technical analysts more or less agree, though not totally, that gold is cementing a baseline while attempting to break through and hold above the all-important 1250 level. Those who disagree, and they are admittedly fewer in number, believe that gold is struggling to maintain momentum above 1250 and more than likely will head down again towards 1200. And if it breaks through that level, will over time aim for $1,000. The battle, which virtually all of them agree upon, is the US dollar versus the safety bid attraction for gold, and whichever wins out determines the price direction. The COT report, incidentally, shows that producer merchants are short on a ratio of 4 to 1. Swap dealers are marginally short, and managed money are marginally short. Silver prices dipped initially last week and then gained some considerable momentum on Wednesday, maintained it on Thursday and fell back again on Friday. As mentioned previously, we are operating within a $1 band and frankly cannot get too excited whichever part of that band it falls within. The general consensus is that if silver breaks through $15 and holds, it will be on a fast trajectory towards $16 and a slow trajectory towards $17. And if it breaks below $14 and holds, it's on a fast trajectory towards $13 and a slow trajectory towards $12. As far as the COT report is concerned, producer merchants are 3 times short than long, Swap dealers are almost equal between long and short and manage money 20% more short than long. What particularly affected gold and silver markets towards the end of the week was the poor French and German PMI data and the slower growth figures out of China, all adding to the fears the world could be entering, at best, an economic slowdown, and at worst, a recession. We produced in the Inner Sanctum a video highlighting the various counterbalances and effects over the next few months, painting a picture of countervailing forces and possibilities. Last week's data from the US was a slightly mixed bag, which supports our theory mentioned above about countervailing forces. Core CPI was, as expected, at 0.2%. The federal budget for November was in deficit to the tune of $205 billion, compared with a deficit of $139 billion the previous month. Retail sales were up and above expectations at 0.2%. And industrial production was above forecast at 0.6%. However, flash manufacturing and services PMI are down over 1 point in December compared to November. So what have we got on the economic agenda this week? Well, it's an important one for sure. On Monday, we have the Home Builders Index for December. On Tuesday, housing starts and building permits for November. On Wednesday, and the most important day, we have the FOMC announcement on interest rates and projections, and a statement by the Fed Chair, Jerome Powell. Thursday, we have the Import Price Index, and on Friday, GDP revision for Q3, personal income, consumer spending, and core inflation for November. So once again, Wednesday and Friday are the two important days to note, though we suspect that the Fed is likely to have knowledge of Friday's figures in advance, and so the decision they make on interest rates is likely to guide us to Friday's figures. The latest data from the financial markets is that there is a 75% probability that the Fed will raise rates next week by 0.25%, and then adopt a far more dovish approach going into 2019. However, we must also be mindful that the Dow Jones has fallen almost 6% since the last interest rate rise, and so will it risk dampening this down even further? Our view is that it should, and we shall state why. Almost everyone agrees that the Dow has entered into bubble territory. When it was close to 26,000 and began to fall, we said that 25,000 was the key figure, and if it falls below that figure, you can expect a 1,500 to 2,000 drop. Well, the 1,000 fall has been achieved, and frankly, if up to another 1,000 points falls off, whilst it may affect the bonuses of some traders, it's still only around 10% of recent highs, and is actually good for the markets. Now, of course, the risk they run then is that the fall continues, and with emerging market crises in the background, fears over Brexit, Spain and Greece issues, and of course the tariff debacle with China, all can prove negative to the markets. On the upside, however, is that once the Fed raises rates, it can fall back to its original excuse of being data dependent and will feel less pressurized to raise rates if global trade is slowing and some of the aforementioned issues have not been ironed out. So in our opinion, raising rates once more will place the Fed in a stronger position to perhaps only raise rates twice next year, as opposed to the envisaged 3 or even 4 times as some were fearing. This clearance will undoubtedly help stocks, but possibly lower the dollar a little. And if that does happen, then of course we have the interplay of whether a small reduction in the dollar, which is good for gold and silver prices, is counteracted by renewed confidence in equity markets. We shall have to wait and see on that one. So this week, it's all eyes on the Fed, and whichever action it takes, we can expect gold and silver markets to respond. Will we break out of that $100 gold and $1 silver box? It's quite possible, but it is dependent, and let's not forget this, it is dependent on the value of the US dollar. Now for some inner sanctum housekeeping. We have fallen slightly behind on some of our inner sanctum videos, which will be corrected this coming week. Also, over the weekend, we are uploading a number of new videos and programs for download, one of which is centered around blockchain technology, and our JPM Morgan series will also be published. We have added some push notification software, which hopefully will alert you to any new additions to the site if you agree to accept them. Please let us know how effectively that works. It is costing us money to use it, so we're hoping that it works effectively, and so we'll welcome your feedback on that. And finally, for those who followed our video on the debacle over the Canadian Post, where we posted our chat with one of their representatives, and are aware that other precious metal sites have commented on this, which is great as they're all spreading the news, we have had a response from the Information Service of the Canadian Parliament. They directed us to the Canadian Post website and to the very part that we highlighted in our video, and suggested that we telephone the Canadian Post for clarification. So there we have it, a perfect circle of non-information. You wait when we tell Her Majesty the Queen about this. But meanwhile, for those affected, we suggest that you do not use the Canadian Post unless you have prior specific agreements with them, and we suggest that you use an alternative courier service instead. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.